Hey everyone, this is DayTraderRockStar, and this is an S&P update and the HPS high probability setup watch list for next week, which is the first week of June. And today, Friday, where I'm broadcasting this live after the Friday market. Market down over 200 points. I could see that. I was off the air today doing some charting and stuff, but I was able to take a couple trades and wasn't really able to get on, it wasn't on the air. I was really focused on getting the watch list prepared and stuff. But of the trades I took today, one of them, the important thing was that I mentioned that I wanted to take a hedge into next week, and I picked up 5 puts on the SPY, and they worked out great. They closed out, well, actually, at the end of the day, they were up about $500. And that was just a hedge going into next week, because we look at next week and we look at, basically we're going to go back to this chart. And first of all, before we even get there, I'm getting way ahead of myself. There's so much to talk about today. I want to break this video into 2 videos. The first part, of course, the S&P outlook and some education, and the second part will be the setups for next week. And we're going to start off because I did recently put out a kind of a real cool cheat sheet, and this is really a kind of an overview of the HPS or high probability setup methodology. And I posted this on the site at DayTraderRadio.com. It's right there. It's the last post on there. So if you go there, you can print it out. I would recommend printing it out and keeping a lot of these, indicators in front of you. The HPS setup is basically based off of 5 indicators. Indicators could be anything that give you a signal for whatever reason. And in our case, we're trading, so I look for signals to sell, buy, short, cover, and those signals are very easily lined up. And when we have multiple indicators lining up, that gives us a high probability setup. So what I did yesterday is I published a cheat sheet for the just an overview of the HPS setup on basically one type of setup. So I'm going to put out probably about 4 more cheat sheets, which are going to be part of the outline of the HPS methodology, and then from that point on, we'll break each one of those cheat sheets down, or each one of those into smaller portions. But right now, I'm just going to introduce you to the HPS cheat sheet. You can see half of them here, because I'm trying to broadcast this into high definition. I can't really make my screen any more bigger or get this, because this is kind of a set thing. But basically, you can see it on the site, DayTraderRadio.com, like I said. And what we're looking at here is just the beginning of what we normally look for. A couple different things we're looking for. Recognizable patterns. Patterns, something that you've seen established over and over again. It makes a pattern of doing it. And channels and flags, head and shoulders patterns. Different patterns you hear, different little terms you hear in the market would be considered patterns. And I just pay attention to a few of them, not to get too complicated, because those few, I just take the best of the best. And this is, channels are pretty much a good example of everything. If I could see a channel set up with the other indicators lining up, then most likely I know I want to be in that trade. I'm not looking for the exotic patterns, the candlestick formations, the band. Well, in some cases I do pay attention to the candlesticks, but on a 1 or 2 bar basis. So let's just take a look at further of this thing. This is the beginning of it. You can see a recognizable pattern and a channel, and how to develop a trend by using 2 pivot areas and drawing that straight line and coming down with that 3rd pivot area, and then taking that trade as long as the stochastics are oversold on the long side, and short side if the stochastics are overbought and we're pushing up against the top of the trend line, like right up here, would be a short sell. And it's basically the same thing. And recently, for the last 6 months, the market has been going up. So it makes more sense to actually look for these setups on the long side, because the shorts have been getting blown out of the water. Now today has been a different day. And today, market closing down. And again, thank God we got those puts. Those puts really kind of leveled off some of the longs I was holding. And now we go into a real critical next week, I think. And we're going to go over that right now, but I wanted to show you a couple things further on this chart. I want to just move this up a second. So we're going to move it right up to the end here, and you can see I moved that chart over. And you can see now, as the chart develops, as we develop this chart, we start to see different things setting up. The stochastic is one of my main go-to indicators that I use. And I really want to have those in the extreme levels when I'm taking a trade. But the majority, if that happens, that's just part of the puzzle. I also have to have that underlying trend line. Now, it could be part of a pattern, smaller pattern, like this flag here and this flag here, or it could be large of a larger pattern, this underlying trend line of a large channel. But when they both combine and give us a dual stochastic or a dual trend line level, that really becomes important. Combined with maybe a moving average or a pivot area, or even a Fibonacci retracement level, or anything like that that you could add to that, increases the probability levels. I want to show you some of the other things that we're looking at, but this is basically the outline of what we're looking for. And we've seen so many trades come down into this level, and we know we have great trades, and we take them, we ride them, and we do so well. And it's so much better than getting into some chop. Even though you have the potential of moving up or moving down, really the high probability setups here, the potential for getting some really nice moves with low stress, low risk, is these high probability setups. So that's what this chart is about. And again, you can download this chart with the other accompanying flow chart. I'm going to show you the flow chart right now. All right, this is part of the flow chart, and this basically accompanies that chart. And we talk about the stochastics and the different indicators we want to have line up. The confirmed trend line, recognizable pattern, the resistance, a moving average, support and resistance. Actually, the real important one is our moving average, which is kind of a minor one, but candle triggers are very important too. And I've added a new indicator recently called the stochastic candle combination. And basically what it represents is having that oversold stochastic either on the 60 or on the daily, but having a, well, we're going to give credit to the pristine buy signal where you have a series of lower lows and lower highs. And then again, you reverse this for shorts. So you break above the previous candle, which are candles, but the last, after you made a series of lower lows and lower highs, 3 or more days, at that point you take that trigger. The trigger would be a break back above the previous highs candle. So if you do start to change that trend, as long as stochastics are in an oversold level, that's the trigger for that. And that's a very powerful trigger, and I would use that to just determine my entries on almost all my trades, especially when you get down to that 60-minute chart time frame. So it's a very important indicator. I would watch for a video. I'm going to do a detailed video on this very soon and just explain how that does. So watch for that video very soon. But you can see, basic flow chart. Again, you could download these and continue to look into them. And also, all the rest of these are going to be about 5 more going to be posted on the membership forum and Day Trading Radio. So let's go and move on here. Now let's talk about, understanding what we're looking for, and also understanding that, here we are with the S&P 500 market. Let's move this over here. We're going to go back a few days, and we're going to go back to the last time we recognized there was a buy signal in the market. It was basically the 60-minute stochastics. This is just again a few days ago. And this is on the 60-minute chart. Just even a day ago. It wasn't even much of a day, but but we knew at this point, this recent point, we're going to have a little upside move. We got oversold. We touched back. First of all, let's start off by getting oversold first time, getting that initial bounce and then the double bottom bounce. But this was really a key level here where we got oversold. And now that we have established really 3 pivot areas, and this one I kind of used as a pivot to gauge this level. So we're able to recognize this level just by this little spike down. And it's amazing how you could sometimes see a spike down in a chart that lines up days later and say, wow, that's just a perfect channel. And it started right there, basically right there. I could probably even adjust this a little and make it line up perfectly. So that's, so when we talk about sell signals, it's just the opposite of buy signal. And that buy signal, oversold stochastic lower trend line, sell signal, overbought stochastic upper trend line. So this is why, and then once this confirms itself, it really put in a 1, 2, 3 pattern. And when a 1, 2, 3 pattern is, you buy 4 and you buy 5, or you trade 4 and 5, wherever it is. You trade 4 and 5 because you can put a parallel trend line in. You have a higher probability setup if it pulls back for a buy because first of all you're taking out the recent lows, and we're in quality stocks. And in this case, the S&P 500 index is not a stock, but you're getting a good read of the markets. So now what do we have? So now we continue to go on with the day, and we can see that we did push right up here. Was it yesterday? Yeah, it was yesterday. We pushed up here, and we started running into this overhanging trend line again. And at the same time, we started getting overbought. So we kind of understood there was a little risk here. There was a little risk coming into this. We took some profits and kind of played it safe going into this week. I actually picked up some SPY puts yesterday, but they're they're very much high risk, expiring today, and it just didn't have enough of the, or I actually had too much of the decay in them, and I just took a small loss on them. But I rolled them over, and right in the morning I decided to get back into the SPY puts because I did feel like today was a good opportunity to pull back. So we loaded up on the SPY puts, and they actually saved the day today. So, and you can see now as the day rolled on, we've kind of pulled back off this trend line. I don't know how this candle ended today. This is kind of I don't think this is a good candle here on the 60-minute chart. We ended up closing down here at 1628, so that candle's a little bogus there. But we ended up closing down 1628 on the futures, which is right down here in that 1632 area. So we're right off the 200-period movement. But what has happened once again? Look at this. The 60-minute stochastics here back into an oversold level. Now I wouldn't even count. This is like a false reading here on this chart. I have to check it on my other charts, but this might actually be influenced in this stochastic indicator because of the move up. It's not really I could tell you it's not moved up like that. We didn't end at 1654. So this little turnover, this was actually probably being more into an overbought level than it is reading. And that means going into Monday and Tuesday, we're probably going to have a buy signal one of those days. Now, I would not mind for a gap down Monday. I ended up taking those puts into the weekend. I would like to see a gap down and to cover those puts and then manage some new positions, possibly to the upside. There's bigger talk of a bigger, triangle pattern breaking down. There's a lot of support that was in that 1640 area. So these are all been taken out, and we have to pay attention to that. There's no doubt there could be, that whole, what makes a lot of sense here, and you can actually see the close here. What makes a lot of sense here is the sell in May and go away trade, which was totally bogus because pretty much every single day we've been up, and now we're entering June. As the Bragg guy would say, is it the big swoon in June? So the May trade has come. The daily stochastics are on the spider here pulling back down. We're kind of bearish on this. The 60-minute chart, I'm going to move that to 60, and you can see we're just getting oversold and on that 200-period moving average. Typically, this means that we have a buy signal here. So I would say, combined with the opportunity of a Tuesday 21-day winning streak on Tuesdays, believe it or not, and hopefully those the clowns out there in media don't put this on the front page because that's guaranteeing a big smackdown in the markets. When they put that in front of it. But you never know. We get a little half-day sell-off tomorrow. We get a reversal. We close pretty strong. People get in thinking that they're going to ride this Tuesday wave, and we pull it out of the bag one more time. So right now, looking for a small pullback on Monday. We'll manage our trades at that point, and we'll continue to, probably, if we see that indicator that plays out in the 60-minute chart, be it a candlestick reversal. If we have one more final candlestick, maybe an inside day, and then a break back above. That break back above will be my trigger, and we'll get again we could take this trade any way we want. Majority, it's going to lift the boats in the ocean, and who knows? We might even come down to here. If we came down to here, we're starting to see a recognizable pattern. Here's a 1, 2, 3 on the 60, and we could actually get right back here. We did show you that on the SPX, so. We'll get there. All right. So early Monday morning. Don't forget futures open at 6 o'clock on Sunday night, and we do have those streaming live on DayTraderRadio.com. So come on by and watch the opening on Sunday night to get maybe get an update on how the market might open up Monday morning. So now after we talked about that. We want to introduce a couple new segments to the show, and we haven't talked about that. Let me see. All right, well, we have a couple new additions to the show. First off was AlgoX, and AlgoX is an indicator that's been developed by one of the members, and a very a programmer and very in-depth indicator, and it's really cool to watch this. And basically, it's an indicator just gives you pretty much overbought and oversold signals in the market. And there's three ways of really looking at it. You can look at it with technical analysis. You can look at it with the regular signals. You have some divergence in, plays in it and stuff. But it's really a good overview of the overall market. It doesn't give you the very choppy market. It gives you more longer term signals. So you might get 1, 2 signals every couple days. But when those things are usually major market moving areas in the market which are moving from one direction to the other, and that's what this thing is really great on doing. So we introduced that to the show, and you can actually check that out. That's right on the right hand side, right underneath the video. The trading AlgoX, and you can launch it, and it basically comes up with a nice little window here with the ES, and it actually, you can see the indicator at the close here up in that 7 zone, which 6 is really the buy signal, but we really sold off at the end of the day. And even the AlgoX indicator here looking, saying that we're extremely oversold at this point. But what happens is this just stays launched on your thing, and you actually can follow the signals as it's happening. And then again, another great little addition to the site is our options section. Now, I've been trading a lot of options lately. I've really like it because of the leverage. It works well with the HPS setups, and basically I take the HPS setups. If there's a stock like Apple or Google, I take the options in that and we just bank it. You could scalp them, you could swing them, you could, and it's basic for me. It's either calls or puts for me. But the option edge section of the site here, run by Learjet, is a site that has been well thought out, and it has great education on it. So you actually go to it. You can see all the different option strategies. He just explains all the terminology, all the Greeks and stuff. Really a great education. I ended up reading this the other day at my house just to catch up on everything, and it was good because, even like I said, I'm not an options guy. I like to trade options like the stocks, but when it comes to the combinations and the just different strategies, the bull call spreads and the covered calls and anything else that you want to do with the options, this is a great place to go there and learn about that. And what's great about the Learjet site, he's going to cover the HPS watch list with options. So when you get that video, you're going to be able to see an options play set up for that, for a setup. He's going to take some of the HPS setups. He's going to show you the options plays that you could take off of them, really detailed, showing you the different, give you a good description of what he's doing, and then actually show you with screenshots how to place those orders. And again, you can see all those, some of the HPSs, which I love, because a lot of education goes along with that. So that is right now on the members site also, and it's a good addition to Day Trading Radio. It's been a while since we really got our own dedicated options area on it, so I'm happy to have that. And looking forward to more of that. So now, with that said, I think we understand the markets, right? We know what we want with looking at the markets. And again, if we get that little move down here, the spiders, I wouldn't mind to get a nice move down to this lower trend line. That looks golden on a 60-minute chart. That looks golden. 161 and change. 162, I'll call 162. We take those puts off, and we ride this market right back up to the top of the trend line. Now you're thinking, well, if we're looking for a little downside tomorrow on Monday, there is some shorts on this watch list, and the shorts in this market have been the hardest to really capture. And I rather, really going forward, take advantage of the overall market currents. This is where we can really, understand the market currents, because being an individual stock, market might be going down. You might be in a good stock where money's flowing into it because it's a safety stock. And we know that a lot of stocks recently, a lot of sectors recently have been pulling back. And, we're going to focus on a couple different sectors tonight. We're going to focus on, where's my notes here? We're going to focus on the, where are they? Consumer goods. And even the airlines are actually starting to look interesting. But, as I get back to the mic here, the consumer goods, even the utilities and energy sector, dividend-paying stocks have been getting pulled back. These might actually come back in to favor, even if the market does sell off, as money tries to find safety in these sectors. So That's going to be. It's still going to be a difficult fight for the bears and for the shorts. So I'm not going to be too aggressive, other than working with the SPY puts, the SPXU, which we're holding. So I'm pretty much hedged pretty good. I do have that hedge going on. I've got this puts in the SPXU, and you're going to see a couple more shorts tonight. So let's get on with that. The video is going to stop for people who are not members of Day Trading Radio, but I highly recommend you come on by and try out the membership. It's very cheap right now, $29.95. It won't stay like that for too long. We have hundreds of traders sharing information on the site, in the rooms, chat rooms, futures, options, stocks, and everything else in between. We do live trade, everything. We're on from 8:30. I'm on from 8:30 to 4 o'clock every night. Then we have their after-hour shows and specials and webinars and stuff. So come on by, daytradingradio.com, and this begins the second portion of it, the high probability setup watch list for the week of June 3rd. There we go. Take care, everyone. All right. Well, I'm not going anywhere. Members, you're going to hear me again for another 30 or 40 minutes, I have a feeling. Ugh.